You're finished with a burst.
Yeah. Well, I don't know if it's so much finished with a burst as it just was a burst all year long. But there was an acceleration throughout the year. There's no question about that. If you look at sales in Dane County, we're up 27% for the year. And I think we went into the year thinking if we could get 10 to 15% growth would be great. The fourth quarter was up 36%.
Wow.
So, yeah. So you look at that and you say, holy smokes, this was way better than we thought. And I think one of the interesting things and significant things is that we've projected out for some time that a normal level of sales for Dane County would be somewhere in the neighborhood of 6,000 sales a year. We're just over 5,900. So we are almost there.
Wow.
And for all practical purposes, we are there. That's very encouraging and somewhat surprising, but clearly there are a lot of influences that contribute to that, for sure.
So that has also then led to a significant drop in inventory, and we haven't talked about that for some time.
Well, if you've been watching these series over the years, you know that, in my mind at least, the central problem in the housing market for the last 6 years has been excess inventories. Right. And some of that's been foreclosure inventory and so forth. But some of it has simply been, demand slacked off, the inventory stayed, and it just would not move through. And so it created a very difficult supply-demand balance and the buyer's market that we had. That has completely reversed itself, particularly in Dane County. And really interestingly, in the last 3 months, it just evaporated. It was the most amazing thing I've ever seen. I knew that the inventories were coming down, but when I actually did the measurement right after the first of the year and looked at it, I was stunned. We are now down to 4.5 months of single-family inventory in Dane County overall. We're down to about 4 months of inventory on the east side of Madison, and we're barely over 3 months of inventory on the west side of Madison. We haven't seen numbers like that for 6-7 years. We have the lowest inventories now that we've had since 2004. And that really sets the stage for a very different kind of a market in 2013. And interestingly, the pace of new listings coming on the market, well, it always accelerates early in the year, and it is. Sure. So far through January, the pace of new listings coming on the market is almost identical to a year ago. And yet we're operating with about 30% fewer listings to start with. So we're expecting very tight inventories compared to last year all the way through the year.
Interesting. So that has implications for sellers, right? And is it good news for sellers, or what is it?
Oh, yeah, it's very good news for sellers, obviously. I think that's been the central challenge for sellers for so long, is that they've had way too much competition, and buyers have had way too much to pick from, so they've taken their time for the right thing to come along, and then, of course, the negotiating leverage is always with the buyers. That now has reversed, and we're last year we saw a fair amount of multiple offer activity early on, especially in the early part of the year. We're already seeing that in January and February. So I think that by the time we get to the March, April, May spring market period, it's going to be manic. Wow. And that's kind of fun for a change, I got to say. It's very nice to see. Yeah.
So does that have implications on new construction at all? I mean, are you seeing any?
I think it will. We saw a little bit of an uptick in new construction last year. Not anything dramatic, but at least it was upward movement. But now this year, with inventories being as short as it is, I think the ground is now fertilized for new construction to finally start to take root. Whether this will be the turnaround year for new construction, we'll see. Yeah. I think it kind of depends on what happens with regular pricing and if inventories stay low and whether buyers start to get frustrated with what they have available and say, well, let's just go build it, which is what's been totally missing in the last 6 years. But certainly it's a better environment for new construction than it was, and I think there's a good chance that we might see more activity. If not this year, certainly in 2014. But I think there'll be improvement this year, I really do.
And what about buyers?
Well, buyers have a very different, we've been mourning buyers for a couple of years now.
The end is nigh.
Yeah, we were in a Goldilocks situation for them. And I think that Goldilocks situation is kind of left. Not totally, though. Two things that they should bear in mind. Number one, we still have the lowest interest rates on record, and that has not yet changed. Now, it could. Right. As we sit here today, we're starting to see a little upward momentum in interest rates. It's not severe yet. We're still in the threes for the 30-year fixed rate. I've seen predictions that we could be up around 4 by the end of this year, or maybe higher. Right. Who knows? We'll see. The Federal Reserve is still trying to keep rates down. There are all kinds of macroeconomic things at work. But clearly, as the housing market improves, we're going to see upward pressure on interest rates. And interest rates will go up. This is not an if question. This is totally a when question. We don't know when and we don't know how fast, but we do know that they will go up. And eventually we'll be back to 6 to 7% interest rates for 30 years. That will happen. Whether it'll take a few months or a few years, we don't know. But we've got the low rates right now, so that's number one. Number two, Interestingly, even though we had short inventories this year, our prices were very flat all the way through the market. We really did not see price increases overall in 2012. I think we will start to see some price increases in 2013. How dramatic, I don't know. But I think we will start to see that again. So buyers that buy now are still buying it somewhere near the bottom. But they're going to have more competition, they're going to have less to pick from. And a couple of years from now, it's going to be a very different scenario.
So I continue to see rental properties going up in different parts of the city or the area. So
Yeah.
what does it mean for renters? I mean,
Well, renters, we've talked about this before. The home ownership rate really spiked a
Right.
few years ago, and then as everything kind of contracted, it went back down, and that created a lot of demand for rental properties on the margin. And we found that we were just simply short. There hadn't been
Sure.
any new rental properties built for probably 8-10 years of any size. So there's been a lot of new construction in rentals now. Rentals are hot. Vacancy rates are still very low. If you're a first-time home buyer and you're thinking, geez, when should I do it? If you care about that, now is the time. One piece of advice that I would give to everybody, we give this all the time. Sometimes we worry too much about timing the market when it comes to real estate.
Yeah.
I just want to remind people, real estate is a long-term investment. It's a place to live, and you should buy it because you want to live there, and you should buy it because you think you're going to live there for a good long time. And if you go in with that mentality, a lot of the other economic stuff will take care of itself. If you're constantly trying to play the angles with real estate, it's not a liquid investment. Things don't move quickly, and that's when people make mistakes and get burned.
so it looks like 2013 will be an interesting year.
We're very excited about 2013. I guess the last thing I would leave you with is that all of our agents are telling us right now that they can't remember the last time they were this busy in January. It's crazy busy.
Wow.
And that tells you that this market is going to explode open.
Right.
Super Bowl was last weekend, so yeah, that'd be
Off to the races.
So we're off to the races, and we think 2013 is going to be a great year. And it's really fun to say that because the last 5 or 6 years haven't been as much fun,
Exactly.
but this year is a lot of fun.
Great. Well, I look forward to talking again in a few months.
Thanks.
Thanks, Dave.